Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothwell, and here are several things to pay attention to for the upcoming trading week. Now before we dive into that, let's talk about those last 4 days of the week. Last week, Tuesday, Wednesday, Thursday, Friday, all opening at the highs, closing almost at the dead lows. It was one of the most aggressive sell-offs we've seen since June of this year. So you're talking 8-9 months of just the worst you've seen. Ugly, ugly, ugly. A lot of that precipitated by Jerome Powell's comments and expectations of a recession going forward. Now, I don't know which way that's going to go, but I do know it created some great opportunities last week, and maybe this week we'll get some as well. Let's start things off this week, though, with a boring piece, which is the earnings calendar. I know it bores you to see the earnings, but there are some important names here. This week, there are 390 companies reporting earnings. We start things off on Monday with Carnival Cruise Lines, Steelcase, and Heiko. Tuesday brings you FedEx, General Mills, Blackberry, and Nike. Wednesday, you've got Micron Technologies, Cintas, and on Thursday, Paychex and CarMax. And that, my friends, is it for your earnings calendar. Now, these are a couple of major names that may be in your portfolio and may present some trading opportunities, but no real major market movers in this category. Now, there is a major market mover happening. That's a little bit later on in the week. We'll look to Thursday at 8 a.m. Eastern Standard Time. We do get the final GDP number. Here you can see the chart of the final GDP numbers going back all the way into 2000, and on the hard right edge, we were at negative 0.9 in our previous quarter. And lo and behold, the little red arrow showing where the expectations are. The expectations right now are that we're going to come out at 2.9. Now, why is this important? It's really critical because there's 3 different announcements that happen for GDP. There's the advance. 30 days later, we get the preliminary. 30 days later, we get the final. So a lot of people think final GDP is really the important one. It's not. It's the advanced number. That's like the benchmark that starts all the expectations for GDP. Now, to put into perspective, this doesn't normally happen, but it's been happening for the past few months. Advanced GDP number was expected to be 2.3. That's great, right? Let's see, 2.3 number, way better than negative 0.9. Well, they expected 2.3, came out at 2.6. The market's like, oh, hallelujah. Then we go a month later. So you go advanced, then you go to preliminary. The preliminary number, which came out in November, that was expected to be 2.6. They thought maybe it was going to come out and be 2.8. Came out at 2.9. So both the advanced and the preliminary beat expectations by a good margin. So now we see this final GDP number. And the question is, do we feel that we're going to beat it again? It seems like we're on a pretty good trend of beating the GDP expectations. Right now, it's 2.9 is what they're expecting it to be. Anything higher than that, you'll see these markets rejoice because that might mean that the Fed is going to step back a little bit on their rate increases, which could help the market. So lo and behold, we don't know which way the markets are going to go, but we can tell you that at 8:30 a.m. Eastern Standard Time on Thursday, there could be some wild swings based off what this number is. Now, I got to go back to the I word. Not me, myself, and I, but the I word that Jerome Powell keeps emphasizing at every press conference that he does, and that is inflation. Yes, I know. I'm just talking too much about inflation. Well, you might remember a couple weeks ago we had CPI numbers. Last week we had PPI numbers, and both those numbers looked really good, better than expectations, which is making a lot of people believe that we might be out of this inflationary cycle. But also remember that Jerome Powell has said repeatedly, yes, we look at CPI, yes, we look at PPI, but we're really focusing on is the core PCE price index. So let's look at a chart of the core PCE price index. Here you can see the core PCE price index chart going all the way back into 2014. Now on the hard right edge, we can see that the monthly declines have been getting better and better and better. Now we want to see that from an inflationary perspective. We don't want to see them up over 0.5 because that would mean significant inflation. However, if we keep dropping like this, that is a sign that inflation may be under control and the Fed can now ease a little bit and not raise as aggressively. Now the expectation right now, we'll draw it on your chart here, is going to be right around 0.2%. And I think you'd all agree that historically, that 0.2% seems to be about normal. Yes, I know that 2021 and 2022 period, we were predominantly over that. But let's look at the long-term historical number, and that's on the left-hand side of your chart. From 2014 to 2020, we pretty much stayed at 0.2% or lower. So this is a pretty good sign that inflation may be getting back under control. Now, that's all subjective and opinionated there. We don't know if it's under control yet. 2-point data doesn't really tell us that it's under control, but it's nice to see the trend of core PCE price index numbers declining. Now, action could happen on Friday at 8:30 a.m. Eastern Standard Time. As soon as that announcement is made, if there is a much higher print on core PCE, we could see tremendous volatility. And same thing if we miss it. Let's be honest, even if it comes out at 0.2, there's going to be a ton of volatility because of expectations. So prepare yourself and be ready for more volatility right around that time. during that trading session. All right, now let's go to the last piece here. This is probably the most important piece. I know we're getting near the tail end of the year. Let's talk about the holiday season. Now, on behalf of Online Trading Academy, myself, and everybody else that's maybe helped you in your educational journey, we want to wish you a very happy holiday, whatever you believe, or even if you don't believe. It's that time of year that you should reflect on your trading, go out and spend your time with family and loved ones, and really be happy for everything that we have and know what we can do to maybe make that better going forward. So on behalf of all of us here, I want to wish you a very, very happy holiday, and we'll see you guys for our final Monday Morning Must Knows next week. Take care, everybody.